Hey everyone, and a special welcome to all you listeners joining us today, especially those tuning in from Stock Talk. Thanks for coming along for this deep dive.
Yeah.
And hey, if you haven't already, make sure you're subscribed to the deep dive feed, wherever you get your podcasts, so you don't miss out on these sessions. Today, we're really digging into a specific set of sources, mostly reports from MarketWatch covering news and data that came out around Tuesday, May 27th, 2025. Got a really interesting mix here. We're going to hit on tariffs, unpack some recent earnings, look at, well, some pretty significant company moves across different sectors, and touch on key economic signals and, what data's coming up.
That's right. And our goal here really is to guide you through this material. We'll pull out the most important bits, flag anything surprising the sources mention, and try to connect the dots, but only based on what's actually in these sources. So you can get a quick handle on what was reportedly, influencing things on this specific day.
Okay, good. And starting the day, the sources did note U.S. futures were kicking up a little.
Yeah, and the reason cited for that little boost, President Trump announced he was delaying that planned 50% tariff on EU goods.
Ah, okay. So pushing back a potential trade hit. Any new date mentioned for when those might actually kick in?
The sources pointed to July 9th, so yeah, a bit of breathing room there, for now at least.
Interesting. It shows how quickly, a political announcement can sway market feelings. Now, beyond just the tariff news, the sources also said investors this week were really watching a couple of other key things.
Oh, absolutely. Big focus on the upcoming earnings report from NVIDIA, NVDA. That's a huge one everyone's got their eyes on. And also, yeah, a whole slate of important economic data releases scheduled throughout the week.
Okay, that sets things up nicely. Let's jump into some of the company headlines from these sources then, because it
Fine.
really seems like tariffs and trade stuff were, well, a constant theme directly hitting companies today, like U.S. Steel, X,
Yeah.
huge surge, right, up 21%.
Yeah, massive jump. And the sources tied that directly to President Trump announcing a $14 billion partnership with Nippon Steel.
A partnership. That's interesting, especially with all the back and forth about Nippon's proposed acquisition of U.S. Steel. What was the stated reason for this partnership deal?
Well, the sources cited the goal as job creation and boosting domestic investment.
Okay, so framing it as a win for U.S. jobs and the economy. But the sources threw in some warnings too, didn't they, about this announcement?
They did, yeah. They pointed out that the actual details are still pretty fuzzy, and importantly, the union opposition to the whole Nippon Steel deal, including the acquisition, is still very much ongoing. So it's not exactly smooth sailing.
Right, makes sense. Big headline, but still questions and pushback. Okay, shifting gears a bit, but sticking with trade impacting things, Apple. Their production is showing a really dramatic shift. iPhone shipments from India to the U.S. jumped, 76% in April? Actually beat China?
Yeah, and that's not accidental. The sources explain it as Apple, actively moving production capacity away from China. And that strategy seems largely driven by these ongoing tariff worries and, well, the general U.S.-China trade friction.
That's a major supply chain shift happening right there.
Yeah.
But did the sources mention any potential, speed bumps, things that could slow down this India growth?
Yeah, they did. They mentioned potential hurdles like, well, India just having less manufacturing capacity right now compared to China, the risk of new tariffs popping up somewhere else, and, other kinds of political or logistical issues that could limit how fast they can really make this move.
So a clear trend, but still complicated. Okay, let's look at another company facing global pressures, Volvo Cars. They're making some pretty big cuts.
They are. Announced layoffs of 3,000 white-collar employees. That's about 15% of that part of their workforce. And it's part of a bigger, $1.9 billion restructuring plan.
Wow. And what reasons did the sources give for such a drastic move?
A few things listed. Their sales have been falling. There's general uncertainty in the whole EV market right now. And notably, direct tariff pressure hitting their business.
Tariff pressure again. Coming up as a factor in these major company decisions, it really shows how these policies just, ripple outwards. Let's zoom in on a few specific sectors based on what's in these reports. Starting with autos beyond Volvo and U.S. Steel, Tesla's European sales took a pretty big hit in April.
Yeah, a really substantial drop. Their sales in Europe plunged 49% compared to last year, down to just 7,261 cars for the month.
Wow, almost sliced in half. What reasons did the sources offer for such a sharp decline?
They cited several things: potential damage to the brand tied to Elon Musk's public political comments, also just more competition heating up in the European EV space from other car makers, and the fact that Tesla doesn't currently offer hybrid options, which, some buyers still want.
Interesting. So kind of a mix of brand issues and market dynamics affecting them. Let's switch over to tech and software. There's talk about Salesforce maybe making a major buy.
Yeah, Salesforce is reportedly getting close to an $8 billion deal to acquire Informatica, that's INFA. Price mentioned was $25 a share.
And how big of a deal would this be for Salesforce, based on the sources?
It was noted as potentially their largest acquisition since they bought Slack. So yeah, a pretty significant move if it happens.
And what was the market's reaction to this news specifically?
Well, Informatica's stock jumped 17% on the news that the talks were back on, but Salesforce stock actually dipped a bit, possibly, ahead of their own earnings report coming up.
Different takes for the buyer and the target. Still in tech, but a different kind of pressure. Apple and Google are dealing with a new law down in Texas.
Right, the age verification law. The requirement cited is that these companies now need to verify users' ages and get parental consent before minors can download apps through their stores.
What kind of concerns are being raised about trying to implement something like that?
Well, the sources highlighted worries about user privacy, obviously, and it's seen as just adding more regulatory pressure on the whole App Store model, potentially not just in Texas, but, globally.
Okay, let's look at finance. JPMorgan Chase is apparently expanding its physical presence, but with a specific aim.
Yeah, they're opening 14 new branches described as upscale, and importantly, they're putting them specifically in wealthy neighborhoods.
What's the strategy behind that, according to the sources?
The stated goal is to deliberately grow their wealth management business. They're specifically aiming for clients who have somewhere between $2 million and $3 million in assets.
Right, going after the high net worth crowd.
Yeah.
And in the personal finance app world, an app called Monarch is doing well.
Yeah, making waves. They just raised $75 million in a Series B funding round, and that round values the company at $850 million.
That's a healthy valuation. What are the sources saying contributed to Monarch's success and, rapid growth?
They're reportedly really benefiting from the shutdown of that popular Mint app back in 2024. Since Mint closed, Monarch has apparently seen a huge, 20x jump in subscribers. They basically filled a gap.
Yeah. That Mint shutdown definitely seems to have opened doors. Okay, moving to aerospace. Boeing reached a pretty significant deal with the Department of Justice.
Yes, they struck a deal that, according to the sources, lets them avoid criminal prosecution related to those 737 MAX crashes.
What were the actual terms of that agreement?
Well, it involves over $1.1 billion in total penalties and required investments. Specifically, there's a $487 million fine, and they have to set up a new $445 million fund for the victims and their families.
And how was this deal received, based on the reports?
The sources noted that the families of the victims were critical of the agreement.
Yeah, understandable given the circumstances. Okay, let's turn to travel and airlines. United Airlines apparently reached a tentative labor deal with their flight attendants.
That's right, yeah. A tentative agreement with their 28,000 flight attendants.
What are the highlights of that deal, as reported?
Well, the terms apparently feature what's described as a 40% economic improvement just in the first year. And that includes things like retroactive pay and bonuses.
Wow, 40% in year one is significant. And also, in airlines, Southwest is making a pretty big change to something they've done forever.
Yeah, a really big one for their customers. They're finally ending their famous bags fly free policy.
The end of an era, really. What are the new fees going to be, and when do they start?
Sources say the fees kick in on May 28th. It'll be $35 for the first checked bag and $45 for the second one.
Definitely a shift for them. Let's touch on retail and fast food. McDonald's is apparently pulling the plug on that Cosmopaid spinoff thing.
That's right. Reportedly shutting down the Cosmopix locations after only, about 2 years?
Any reason given in the source for that quick shutdown?
The main reason cited was just lower than expected demand. So McDonald's is apparently shifting its focus back to its main core restaurants.
Okay, an experiment that didn't quite work out. And lastly, in entertainment, sounds like the box office had a monster weekend.
It really did. Total U.S. box office sales apparently hit a record $326.7 million over the Memorial Day weekend.
Wow. Which movies were the big drivers of that, according to the sources?
Disney's Lilo and Stitch remake reportedly grossed $183 million, and Paramount's Mission Impossible, The Final Reckoning, pulled in about $77.5 million.
Okay, a mix of remade nostalgia and action sequels leading the charge. All right, we've hit a lot of specific company news. Let's pivot now to some of the broader economic signals captured in these sources. There was a pretty notable shift in global economic rankings.
Yeah, Germany has actually overtaken Japan to become the world's biggest creditor nation, and apparently this is the first time that's happened in 34 years.
34 years, wow. That's a pretty significant historical shift. How do the numbers stack up, according to the source?
Well, at the end of 2024, Japan reportedly had record net external assets about 533 trillion, which is roughly 3.7 trillion US dollars. But Germany surpassed that, reaching almost 570 trillion. It kind of reflects, different long-term patterns in trade, investment flows, how they've built up foreign assets.
It really does underline a change in economic weight over time. The sources also touched on China's industrial profits.
Right. China's industrial profits were up 3% in April. And that growth was apparently driven mainly by gains in, high-tech sectors and equipment manufacturing.
And this was despite those heavy U.S. tariffs we talked about earlier, the ones hitting companies like Apple and Volvo.
That's right. The source seemed to indicate that while those trade pressures are real, government support measures specifically helped private firms and foreign-invested companies offset some of those headwinds. Though it's worth noting, state-owned enterprises and sectors like autos and apparel within China reportedly saw declines.
Okay, so targeted support may be helping cushion the blow in some areas. Overall, though, the sources seem to paint a picture of, ongoing economic uncertainty right now.
They certainly do. President Trump's renewed threats of trade wars were cited as adding to that uncertainty, as was apparently a controversial tax bill. Both of those factors were reportedly weighing on consumer confidence and making bond markets a bit jumpy.
Yeah, that explains why markets are so sensitive to policy talk. And looking ahead, there's a whole lot of key economic data due this week that could, really offer more clarity.
Absolutely. The sources pointed out that crucial info like revised GDP numbers, really important consumer spending data, and the minutes from the Fed's last FOMC meeting are all coming out this week. And those could give really critical insights into, how the economy is actually doing and maybe what the Fed might do next.
Just focusing on the data specifically listed for Tuesday, May 27th, what were those key releases?
For Tuesday itself, the list included durable goods orders, both the main number and the one excluding transportation, the S&P Case-Shiller Home Price Index year over year, the CV Consumer Confidence Report, and the Dallas Fed Manufacturing Index. So quite a bit just for Tuesday.
And then what can we expect later in the week from the sources?
Wednesday brings those really important FOMC minutes. Thursday, we get the second estimate for Q1 GDP growth. And Friday wraps it up with the core PCE price index. That's a key inflation gauge the Fed watches closely, plus personal income and personal spending numbers all month over month.
Okay, so a lot for markets and, everyone trying to read the tea leaves to digest, to get a clearer sense of economic momentum or maybe lack thereof.
Exactly. These data points are always watched super closely for how they might shift thinking on inflation and the Fed's next moves.
All right, we've covered a really wide range here. From the immediate flutter caused by a tariff delay to specific company wins and losses, major industry shifts like in autos and tech, global economic rebalancing, and all this data coming up. So based only on these sources we've unpacked today, what does this all kind of synthesize into? What's a takeaway for you, the listener, trying to make sense of the current landscape?
I think what really jumps out when you pull all these threads together from these particular sources is just how pervasive the influence of policy and political decisions seems to be on the market right now. It really feels like it's everywhere we look today.
Yeah, it's not just some background noise. It seems really central to a lot of these stories.
Totally. I mean, the tariff delay directly gives futures a little lift. The Trump announcement is cited as the reason for U.S. steel's jump. Apple and Volvo are explicitly mentioned as reacting to trade pressures. You've got a state law in Texas creating new headaches for Apple and Google. Broader trade war talk and a tax bill are flagged as sources of overall market nervousness. Even China managing tariff impacts is linked back to government support.
So you're seeing companies making big strategic moves and whole sectors reacting, Often, it seems, in direct response to government actions or specific political figures mentioned right there in the sources.
That's exactly it. And I think understanding that really tight connection between policy and market moves,
Yeah.
which is just so clear in the snapshot of news, helps you look at headlines and see beyond just the raw numbers. It shows how these forces, according to these sources anyway, are actively shaping company plans, pushing stock prices around, and feeding into those bigger economic trends.
And doing this kind of deep dive lets you see those connections quickly, right? Without having to wade through every single article yourself. It sort of distills what was reportedly making waves on this particular day.
And knowing what key economic data points are on deck helps you anticipate where the next potential market drivers might come from, especially given the themes of uncertainty highlighted in the sources.
Okay, so we've navigated from, micro-level company stuff driven by policy all the way up to macro shifts and data points today.
Yeah, it's definitely a dynamic picture, and these sources give us a pretty clear window into all those intersecting forces just on this one day, May 27th.
And as you think about all the details we pulled from these specific sources today, the tariff delay boosting futures, the president's partnership announcement driving U.S. steel, companies like Apple and Volvo explicitly reacting to trade policy. Then you add the Texas age verification law hitting tech, the sources pointing to renewed trade war threats, and a controversial tax bill causing general uncertainty, and even the mention of government support playing a role in China's industrial numbers. It really is striking how many of these core business and economic narratives seem directly tied to, or at least heavily influenced by, government action, specific policies, or political figures mentioned in the source material.
It definitely leaves you wondering, doesn't it? Based only on the information presented in these sources from May 27th. What does this apparent, very widespread concentration of political influence across so many different sectors actually tell us about what's fundamentally driving the market environment right now?
Something powerful to chew on as you look at tomorrow's headlines. Thanks for diving deep with us today.